Welcome to Aeron, Dilemma of Market Selection, presented as part of the case study series by Skilled MBA. This strategic case explores how a fast-growing technology firm in India must decide between expanding internationally or deepening its domestic footprint. Post-pandemic momentum has created opportunity, but also pressure, and Aeron must now make a carefully calculated move. Aeron stands at a pivotal crossroads. Strategic crossroads. Should the firm prioritize the familiar terrain of India or explore the ambitious but uncertain paths in the US or EU? Resource allocation. With limited resources, the decision must weigh opportunity, risk, and readiness. Market dynamics. Timing, positioning, and the nature of post-COVID recovery all influence this choice. This is not just a market decision, it's a strategic growth moment. Aeron must weigh 4 dimensions: market entry viability. Which regions offer both demand and access? Market selection criteria. Where do competitive pressure and regulation make a difference? Risk-reward balance. Are the international bets worth the higher stakes? Capability alignment. Can Aeron's internal strengths match external demands? Each lens reveals a piece of the full decision-making puzzle. This case challenges students to assess market potential, using size, demand, regulation, and consumer perception. Think like entrepreneurs, make decisions with incomplete data and limited resources. Compare entry strategies from exporting and licensing to joint ventures and full ownership. Analyze domestic versus international growth and determine the right timing and trade-offs between the two. India offers high market familiarity, deep understanding of the ecosystem, steady growth, especially for Aeron's tilt-switch technology, lower risk, thanks to known regulations and supply chains, low entry cost, infrastructure already partially in place. But growth remains gradual and niche, ideal for safety, not scale. The US offers high revenue potential, a large, innovation-hungry market, stringent regulation, certification and compliance investments are significant. Tough competition, numerous entrenched players with advanced capabilities. It's an exciting market, but one that demands rigorous planning and bold execution. The EU presents a third pathway, moderate entry cost, lower than the US, but still substantial complex compliance, multiple countries, multiple rules. Brand preference, European consumers often lean local. Despite these challenges, the EU's tech-forward ecosystem makes it a promising, if nuanced, opportunity. Aeron's team should apply CAGE framework for understanding cross-market cultural, administrative, geographic, and economic distance SOM analysis. To assess external forces like politics, tech, and environment, Porter's 5 forces for judging market competitiveness. Entry mode matrix to evaluate exporting, licensing, JVs, or subsidiaries. These frameworks ensure a systematic and strategic approach to market selection. Expansion brings exposure. Risks include high initial investment, capital-intensive entry, cultural misalignment, misunderstanding, buyer behavior, regulatory complexity, delays, certifications, and penalties. Aggressive competition, defensive reactions from existing players. Ignoring these could turn opportunity into overextension. But the rewards are real. Larger revenue pools, particularly in premium tech segments, brand elevation, international presence builds prestige, learning and innovation. Advanced markets accelerate product development. This makes the international move potentially transformative, if done right. 4 pathways for internationalization: direct exporting, low commitment but limited control. Licensing agreements, Use local players, protect IP joint ventures, share risk and insights. Wholly owned subsidiary, full control, full responsibility. Each comes with trade-offs across cost, speed, and control. Aeron might consider a stepwise approach. 1. Market research and validation. Deep dives before any move. 2. Limited market testing. Pilot programs to reduce risk. 3. Strategic partnerships. Work with local distributors or brands. 4. Scaled expansion. Invest gradually as confidence grows. This ensures learning before scaling. No matter the market, product strength must shine. Product differentiation. Unique features must be clearly articulated. Market adaptation. Messaging must speak to local concerns. Premium positioning. In developed markets, pricing should reflect value. The goal: turn a tech innovation into a compelling solution worldwide. This case is built for interactive learning. Market selection matrix. Evaluate and rank markets. Role-play debate. Simulate boardroom discussions. Case simulation. Make entry decisions under constraints. Discussion. Tie decisions back to frameworks. Each activity encourages students to think, argue, and decide strategically. Let's conclude with 4 core lessons. 1. Holistic evaluation. Don't chase size. Evaluate demand, risk, and fit. 2. Capability assessment. Match ambition with ability. 3. Domestic first. Sometimes deeper home focus builds better foundations. 4. Strategic patience. Validate, adapt, and only then expand. Thank you for engaging with Aeron Dilemma of Market Selection, presented as part of the case study series by Skilled MBA. This case demonstrates that market selection is never just about where, it's about when, how, and why. For firms like Aeron, the decision to expand must be backed not just by ambition, but by insight, discipline, and strategy. We hope this case has helped you think critically about international expansion, risk, and the power of alignment between capability and opportunity.